Hi everybody, welcome to the Steckline Report. Well folks, we've got some things going on at the Chicago Futures Trading Commission that should probably affect all of us at one time or another, because those markets really set the basis for all of our cash markets when it comes to grains and livestock. But the top U.S. derivatives regulators just a week or so ago voted 3-2 to curb trading in oil, wheat, gold, and other commodities after a boom in raw material speculation, record high prices, years of debates of why they should and shouldn't do this, but they voted to do it. The rule limits traders, right now we understand, to 25% of deliverable supply in the month nearest delivery. The spot month limits apply separately to physically settled and cash settled contracts. Gas contracts are exempted from this because they are cash settled. But other than that, it looks like most of our livestock and grain markets will be involved in this thing. And I kind of go along with something needs to be done. Now, you still have to think just a little bit about this speculative trading. Over the years, some 30, 40 years of my broadcasting career, I've had a lot of mixed emotions about speculators trading our commodities and setting our prices each and every day when we go to the elevator or to the auction. Most of the time it was negative. It seemed like the speculators were the sellers most of the time, and the buyers were not out there, and so it pushed the market down. However, that wasn't the case the last couple of years. When things really got tight, speculators moved this price straight up, and we're talking about $8 wheat and $6 better corn, and we can go on and on. So speculators do some good at times, but I do believe that they need to be watched a little closer, and maybe too much is too much when they have thousands of contracts on the speculative side. So this is put together to maybe hamper that some, and we'll see how it all turns out in the end. By the way, foreign investors in Brazil, something else. I can remember back in the late 80s and early 90s when I went with our Secretary of Agriculture to the Soviet Union, trying to help those people get into a society like we have in America and help their farming operations, and I think we helped too much. For example, I can remember the biggest news we had back in the late 80s and early 90s was when Russia was buying wheat. You won't worry about that now. When I was there in '87, I drove out on some of the biggest and the most beautiful farmland I ever saw in my life. You couldn't see the other end of farms with good black dirt. The problem was they didn't have any inputs. They didn't have any machinery. They didn't have any know-how. Their farmers they just weren't much of a farmer. That's all changed. They've got our machinery, they've got our fertilizer, they've got some real good information from our universities, and now they export wheat. They don't buy wheat. Foreign investors in Brazil, they're coming by the hundreds right now, impatient, waiting for the Brazilian government to open things up, because they shut everything down. The government did just about 8-10 months ago as far as foreign ownership is concerned. However, their current president says she will do something about opening it back up, because they know in order to develop agriculture any further than what it has been, it's going to take money. They don't have it. They need it from other places. They're getting it. All kinds of people are investing in the Brazilian agricultural scene. In fact, one outfit has 170 million acres I just see worked out here on rental and buying. And folks, they are kind of like the Soviet Union, where what was just a few years ago. They still have a lot of land that can be put into production. Most of it, though, does have some trees on it, and there'll have to be some expense to get it into production. In any event, look for Brazil to be more of a pain in our export side, especially for soybeans, than they are today. See you on the next Steckline Report.